I used to work with a trader who, he wasn't a day trader, but he was in a live room with me every single day. And I'm like, why are you in here? He's like, well, I'm down here on the 5 minute charts. And he's like, what I'm doing is I'm getting so many more reps in the market than I would be on a 4 hour or a daily. On a daily chart, he's like, I may get one signal or one setup, whatever he was working on, one a month. Here in the 5 minute charts, I may get five a day. So even though it's not the same time duration, he's able to see and train his eyes to see whatever it was more because he was on a lower frequency market.
So, Akil, last time I had you on was in 2017. I know there's a lot that happened since then. COVID back then wasn't the thing at all. It was something completely unheard of for sure. So let's begin with tell people a bit about who you are and what you do.
Well, I'm a professional trader, which is still kind of cool to say that. I've been trading since 2007. I started off in the stock market, more of an investor. It's kind of how I got introduced to the financial markets, ended up falling in love with it, ended up seeing it as a tool where I could achieve the other aspects I want to do in life, as far as not just financial freedom, but freedom of time and the ability to kind of do what I want when I want. That's kind of the beauties of trading. It's very flexible, and specifically the Forex market, since it's a 24-hour market. I went on to managing money for a little bit, did not enjoy it at all, but it was a valuable experience. And I started coaching traders back in 2012. So I get to do what I love from a trading perspective. I get to do what I love in a way that gives back, as well as it's helping other people hopefully achieve the same goals that I have, and spend a lot of time with my family, which is good. So living the life my own little way.
Awesome. And like we said before, off air, you do put out a lot of content to have people, and like you really care about helping traders, which is insane. It's a really good thing. I just noticed a few minutes ago you are close to 50,000 subscribers on YouTube now. So that's really good, a big milestone also. So let's kind of what would you say was the biggest change or difference in the past like 3 or 4 years or so since we last spoke?
Well, I would say just maybe not a change in philosophy, but continued growth, continued development. As a trader, it's funny. I've gone through these stages in my 15-year career where, obviously I went through a pretty bad phase where I was doing everything wrong and messing up, and the normal mistakes that all traders make. Reckless, a lot of issues on trading psychology. And I kind of went in order to get discipline, to put myself in the best position to be disciplined, I went with a very specific style of trading. I locked myself into that style of trading. I said, hey, Akil, only focus on this, do the best you can at this, and just find a way to make consistent returns. Well, after becoming consistently profitable, that's opened up more time, and being kind of a nerd and a student of the game, I've always had this growth mindset where I want to learn more and more about the market. So I've actually kind of gone back. You would think I'd progress and get more fancy and complex. I've actually gone back to the basics. So I've gone back over the last, I don't know how many years of just relearning the basics, relearning the foundational principles, and really becoming a master at them. And I find that the more I master those kind of simple, basic foundational elements, the better trader I become.
Tell me about this. So a lot of people talk about like keeping trading simple, but sometimes it's like even too complex with that. So how would like trading simply look like? Like what are some of the things you kind of took off or simplified to make it more simple?
So I've always been a price acting trader. So I use technical analysis. I look at the price charts. For me personally, the backbone of my philosophy is support and resistance, supply and demand. So every trading decision that I make, whether it's an entry, whether it's an exit, is based off of some type of support or resistance, some previous type of support or resistance area. And, so that's always been the foundation of it. And when I say I've gone back and gotten simpler, I'm not adding indicators or anything super fancy like that. I've gone back to the basic elements of, hey, the simplicity of reading a candlestick, right? I used to just look at a candlestick, and, many traders do this where, hey, if it's red, it's bearish. If it's green, it's bullish, blah, blah, blah. I've gone back to actually reading or being better able to interpret the story that the candlestick tells me. So it's not just, hey, red is a bearish candle, green is a bullish candle. There can be green candles that can actually be looked at as being bearish. There can be red candles that actually looked at as being bullish. So the entire makeup of the candle, how it forms, to open the high, to close the low, and using that to really interpret a more detailed story of what the market is telling me. And being able to understand that more detailed story has allowed me to be more efficient when price gets to those important support and resistance levels that I'm paying attention to.
Are you still looking at these advanced patterns in the market that you used to trade before?
Yep, still looking at them. I don't talk about them as much, so people think I dished them. But they are what they are. I mean, it's a pretty, I don't want to say robotic because you got to do the analysis to find them, but I don't really have any fancy way of trading them. Like, I spot one, I trade it. It is what it is. So I look at them as kind of a strategy that's running on autopilot on its own. And while that's running on autopilot, again, it allows me to kind of focus on other things as well. And it creates a nice little diverse portfolio of strategies where you have certain things that can take advantage of consolidative markets. You have certain things that can take advantage of directional markets.
I think that's a big difference. Like, you have people online who teach like one style of trading, like these patterns, for example, and they say you got to use just that, and that's the only way to make money trading. But you're able to kind of open the doors to more possibilities, more ways to trade. And I think that's a big key in being able to teach people also, that they can have multiple styles, multiple things they do, and still work out really well.
Yeah, I think it's necessary. I learned that, through years in the market where, again, I once advanced pattern formation started working for me, I said, hey, that's it. This is all I'm going to trade forever and blah, 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 blah. And just going through different market conditions and seeing how, things don't always work the same as you would expect. It teaches you that, hey, if you want to be able to be good in any market condition, whether it's COVID, whether it's the Trump tweet era, you need to be diverse. You need to be diverse in your skill in it. It's no different than I look at a professional athlete where if you have one particular skill set, yes, you can be good. But if the game ever changes, you may become an endangered species. So those who can adapt, they have the best chances of staying in that league or staying in that sport for the longest periods of time because the coach can always find a way to use them.
What are some of these markets where these patterns tend to work the least? Because you could say it's just like trending versus sideways, and they work better like in one condition. But I'm guessing these patterns, they kind of have different ways of working, and they work in different conditions more than others. So how would you describe those?
For pattern trading, you typically see them more in consolidation. Now, they perform well in all different market conditions, but just based on how they form, it's a consolidated structure where, price isn't really, making directional moves. So you tend to see them more in consolidative period when the market is condensing. So I always say they perform better in consolidation. But I guess probably a better way to say it is that they're just, you see them more, they're more frequent when the market is in kind of a sideways or a choppy movement versus just in a trending or directional type of state.
And you feel like fundamentals, like you discussed before, the Trump news affect that more and they kind of make them less reliable, or?
Fundamental technical debate, that's always an interesting one. They both make the market move, right? So the market is a visual representation of all of its participants, and technicals play a role, fundamentals play a role. I am extremely biased towards technicals as far as being a trader. So thinking more short term versus being long term. I think there are a lot of funny things that happen with fundamentals where they try to get people to do kind of what smart money, bigger banks, institutional traders want them to do. But yeah, they move the market. And if you're going to see big directional movements off of fundamental events, really depending on what time frame you're on, they will affect pattern trading. Honestly, they will affect any type of trade. My best advice is, again, for a shorter term trader, is if there's a massive fundamental event that has the potential to have an impact on the market, your best bet is just to stay away, wait till the dust settles, reanalyze, and then get back after it after the news is kind of gone past.
So we've got cryptos coming up since last time we spoke. Is it something you've been jumping into like really quickly, or not at all, or kind of somewhere in between? And how do you look at cryptos?
Not at all for me at crypto. I look at it in a few different ways. I should first and foremost say this: I'm not knowledgeable at all about them. So I'm not a crypto expert. I haven't done a massive amount of research out there. So I'm still open to learning and whatnot. From a longer term fundamental standpoint, I have yet to see any proof of kind of a long-term lasting value in crypto. I think there's a lot of speculation right now, and that doesn't mean you can't trade it and make money. Speculation is something that goes on in every market. But I do think at some point there has to be kind of a foundation below that speculation. And with crypto, I just haven't seen that yet. So bigger picture, I'm not a fan of it yet. I'm still kind of waiting. As far as analyzing it, the same technical rules apply to crypto like they do to any market. The same classic and historical patterns do appear. I would say the biggest difference I see with crypto is it reminds me of a young Forex market. So I got involved in Forex when it was still pretty young. Again, 2000, early 2000s, and Forex just started being kind of available to the masses in what I think the 90s, I believe. But I look at crypto as being a very emotional market. So when it moves, right? Because everyone is kind of hop on the bandwagon, get rich quick. So it has these very violent swings up that will make your life, violent swings down where we see 50% drawdowns. And as someone who has managed money in the past, I don't want any parts of anything that has a 50% drawdown, especially short term. So I think it will settle down some. I think I don't know the saying, but whatever the better ones, a few good ones will kind of stay at the top while the rest of them kind of die. And it may turn into more of a traditional market, but right now, just I'll stick to what I know best and stick to what I'm more comfortable in.
It's gonna be interesting to see how this evolves and how the market kind of slows down or stabilize more, for sure, in the next couple of years if it happens, for sure. Now, a lot of people have been saying that the Forex market is kind of like decrease in volatility and it's like getting boring now, or there's less moves in it. So how do you deal with that?
Yeah, it is. There is less volatility in the market. Again, I think it's that natural kind of, evolution of it was the new younger kid. And since then you've had binary options, you've got crypto, and crypto's taking a lot of a lot of investors away. Unfortunately, I want to say a lot of the suckers. A lot of people get into Forex because they think it's a get rich quick scheme. And those people become suckers for the people that are really making money. And I hate putting it like that because I don't want to make it seem a negative, but I was one of those people as well. And I think a lot of those people are shifting to crypto. So you're not seeing as much of a volatile market. So it's the same things still work. But it does make it a little bit more difficult, especially during years of low volatility. I remember 2014 and I think 2016 were two that stand out to me. We just have to kind of change your expectations. You have to make adjustments. And, that's part of being a professional trader. If you want to be consistently profitable, again, you have to continue to grow. You have to continue to adapt. You have to continue to develop. And you've got to find a way to win no matter what the market conditions are.
How do you measure like volatility before let's say the year starts? So let's say like we getting to 2022. How do you know that the market's gonna be volatile or less volatile? Are there some indicators you can look at, or some just price movement you can look at to determine that? Or
in advance, no. It's you don't know until you know. And you could look at average true range historically and make comparisons. But you don't know that it's going to, I don't know if 2022 is going to be an increased or decreased year of volatility. I just don't know. My job is to deal with whatever the market gives me.
Yes, you got to kind of take more hits first, and then you understand how the market moves during the year. Interesting. What are some of the common mistakes you see that traders you teach or you coach make these days? What are some of the things that are kind of common where they kind of lose time or are not really getting the best results in?
Kind of the same old things. You see the same typical mistakes that hurt traders, and most of them, we can split them into two categories. We can say on the technical side, we can say on the psychological side. On the technical side, it's just the inability to learn or take time to learn. Everyone wants the get rich quick formula. Everyone wants, hey, this is the secret strategy. This is the secret entry setup. This is the secret pattern. And honestly, you need to take time to learn the skill of trading, right? Technical analysis or technical analysis, is a skill. And like any other skill, it takes time to learn. It needs to be learned in a very specific way. If not, you're going to be in trouble. So I think traders rushing through that process is one. And then on the psychological side, which is always going to be more prevalent, it's just, not sabotaging yourself, not, dealing with emotions. Fear and greed are typically the two main factors that move traders. It could be fear of missing out. It could be fear of getting involved. So fear of missing out is, you enter a trade too early because you don't want to be left behind, or you enter a trade too late because you saw a move and you're upset that you didn't get a part of it. So now you kind of emotionally jump in. Fear of being involved, right? You have a perfect setup in front of you, but you're nervous because, you don't know what the result's going to be. So you skip it and all of a sudden it becomes a winner. Moving stops back because you don't want to take that loss, taking targets early because you're afraid that the profit is going to leave you. Those common mistakes have not changed since the beginning of time, and we still see them every day with traders traders out there.
One of the amazing things about you is how growth oriented you are. Like you have a really, really good growth mindset. How do you maintain that? Is this something you had like all the time forever before, or do you have to kind of nurture that and kind of get it to always stay top notch?
I don't know. That's a good question. I think I've it's definitely something you got to convince yourself of. Like you've got to. I'm a very stubborn person, so there have been times, especially my younger trading career, where I've been locked into my own mindset and like my way's the highway and that's it. I think you just have to be open and acceptive. And I think trading in specific, it humbles you, right? Trading humbles you where you realize that you're not a genius, you don't know it all, and that there's so much out there to learn. So I think that has helped. I can tell you what, becoming a parent has helped as well. When you're dealing with kids and, me and my wife, our parenting style is kind of like, hey, explore, make mistakes, all that fun stuff. So we encourage our kids to experiment. Like, hey, we're not going to tell our kid, hey, that doesn't work. Like, hey, try it, see for yourself. And you learn a good lesson or a bad lesson from it. So I think that's carried over into trading as well. But I think you just have to be deliberate about kind of changing your mindset. And that's something that can be done. I do that a lot I work at a university. We do that a lot with the college kids, where we do programs where we work on kind of changing the neural pathways in their brain and changing their former thoughts and being open to new thoughts. And it takes time, practice. You got to be deliberate and consistent with it. But I think once you kind of realize the benefits of having that growth mindset and how it allows you to continue to progress to the next level, you fall in love with it. You never want to go back.
So how would you say being a parent affected your trading? Because you could say you have a lot less time to deal with trading, but then that could be a good thing also. Do you feel like it affected it in a good way, or you still have to learn to deal with it now?
There's always pros and cons. It's never fun to have. I got a 3-year-old, a 7-year-old. The 3-year-old now, runs into the office at random periods. But you get that. That could be annoying sometimes, but you get used to it. I would say patience, discipline, and efficiency. Being a parent takes patience. Being a trader takes patience. I don't know if being a trader helped me become a better parent, or a parent helped me become a better trader. Probably blends some way in somewhere in the middle. But also being productive. So we spoke earlier before the show about social media and how it's like a machine that I can create so much content. And something that I was really poor at before was being organized. And, when having kids, it obviously took my trading time from being able to spend like 10 hours in front of the chart a day, just studying and learning, to a lot less. So the question I asked myself is, well, how can I achieve the same amount of stuff, or how can I do the same amount of stuff in a lesser amount of time? And the result was that I was just being very inefficient with my time. So I worked a lot over the last few years on just productivity, efficiency, to-do lists, different techniques of not wasting time. And I've discovered that I can get the same amount of work done that I was doing before in 10 hours in a couple hours if I just do it the right way.
I want to hear more about your routine during like the holidays, because it's something we talked about last time, where you kind of go back, review things, you did some backtesting during the holidays. This interview is going to go live maybe at the end of the holidays or something. So what's your routine during the holidays? What do you spend time on? What do you focus on?
So yeah, this is my magical time where I get a few weeks away from trading. I don't have any live trainings going on until the new year starts. So it's finally like free time. Not enough problems. I got kids now. So now it's like, oh, you're free. Go watch these kids for a couple of hours. But I try to accomplish a few things during this time. First and foremost, I want to take time to relax. I want to get away from any active trading, get away from the charts, kind of just refresh and wait till next year to get a fresh perspective on things. I also want to work on myself. So aside from doing kind of a year-end review, reviewing my trading, seeing what went well, what didn't go well, if there's anything I need to add or work on, I want to do some continued education. So, right now I'm trying to finish up a book on volume, because volume is something that I've been very interested in. This is another thing that you go back and interview me from probably 3 years ago, right? I'm bashing volume in the Forex market all over the place. I mean, volume is stupid. There's no real way to read it, which is all true. But having that growth mindset allowed me to see kind of a different perspective of volume. And I do think it's something that I can eventually add to my trading. So continued education in that aspect. Strategy development. There's a few strategies I've been working on for 2 years. Some of them got derailed by life and other stuff, but I'd like to go back and still continue developing a strategy for me specifically on the daily chart, something that I can literally check the charts once a day. So something longer term. So those are my two goals for the winter. I don't know if I'll get one or both done. I should at least get one of them done. I don't know about the strategy, but taking time to really just work on myself as a trader, which is kind of the downside of education. I don't really have a lot of time to do that. So it kind of stunts my growth a little bit.
Yeah, it's very true. And daily chart is something I'm looking at too also, because it's something you could use and pretty much have a lot of free time at the same time. So it is something interesting to work on. But it's tougher because the price tends to, especially now, not move and reach the target that much on a daily chart. So interesting to look at. I'm very curious to hear what you learned about volume and how you can use it to the Forex market.
Yeah, so volume, the short version of it. So there's no real volume in the Forex market, no true volume in the Forex market as far as like a number, because there's no central bank. It's whatever you get as a Forex quote is based on your broker and their data provider. And that's why you see kind of different quotes across different markets. So whatever you get in as far as volume doesn't really tell you who's active in the market. It's who's active based on your broker and their data. So the numbers can be a little bit they're not, you got to take them with a grain of salt. But what you can understand with volume is that it's the relationship still exists. So there's only so many Forex brokers out there, and you can assume that similar movement is going to be done across the board with these different data providers and brokers. So when you look at the relationship of volume, not necessarily a number, but relationship and volume from candle to candle or from area to area, it allows you to make some assumptions, allows you to make some predictions, and can just potentially add a little bit of an edge as far as being precise with entries or being precise with exits. So I'm finding it very interesting. It goes hand in hand with my price action trading. So again, I'm always looking for a way to just become 1% more efficient. And if it gets me into a few more wins or keeps me out of a few more losses, or allows me to take profits a little bit earlier before a turnaround, then that massively benefits my trading.
Do you know if there are any like websites and tools that give you a better volume than your broker's volume, or that's really the only thing you have to deal with?
Yeah, it's. I mean, I guess you can. I don't know if coagulate is the right word. You can consolidate different volumes from different data providers if you want. But in all honesty, I don't think the actual number matters as much as it does like in the stock market, right? You're not looking at historic levels and whatnot. I think the relationship is what matters the most. So that's what kind of understanding that is kind of what's changed my opinion on volume from, hey, it being big and stupid to, hey, it is what it is, but it can still be usable.
Interesting. And I think having growth mindset is something all traders should have. Not all have that for sure. So people are like believe that they can have one strategy and then stick with it forever after, but that's not really how trading works.
No, it doesn't. I mean, you can try it, and I guess you can have one strategy, but I think that strategy does need to change and develop over time. And you even see this with automated traders. I get into a lot of arguments with traders that are like, hey, automated trading is the only way to go. And like, once I find a fully automated system, I set it and I forget it and it's going to work forever. And the truth is, I know a lot of programmers, I know a lot of people that trade automated systems, and they're doing the same type of evaluation that discretionary traders are doing. And they have to continue to look and evaluate their trading system because market conditions do change. For example, if you have a directional based automated strategy, 2009, 2010, you're killing it in the market because everything is just going in a direction, right? But you fast forward to a 2014 or 2016, where you've seen a lot of sideways movement, all of a sudden that same strategy or that same program isn't working as good. And then the question is, do you just sit there and let it fail? Or do you go in and analyze and tweak and make the adjustments needed to be productive during new market conditions? So I do think you can be productive with a single strategy as long as you're continuing to develop, adjust, and adapt that strategy.
I'm pretty sure that you look back at your strategies only like every year to modify them, not like every couple of months. And I think that's something that most traders do wrong, is they try to like every few months go back and try to make it work. But you just cannot make it work if you tweak it all the time. So is every year for you like a good time frame to go back and see your strategy and modify it, or even longer than that? Or how do you deal with that?
So I do a big evaluation every quarter, so every 3 months. At the quickest, I can make an adjustment, a small adjustment after 6 months if I'm noticing something that has popped out right away. The good thing about having experience in the market is now I'm better at evaluating because the market just does the same thing over and over again. So even like, the last 2 years with COVID, this is no different than the crashes that I saw in the early 2000s. So it's like, hey, I remember that. I remember how I dealt with that. I kind of know where to focus on. So having experience has helped with that. So 6 months at the earliest, but yeah, usually it's a year if I do anything, and the adjustments are usually pretty small.
Are there any ways to kind of shortcut that experience in terms of like if you've not been trading for 10 years, how can you learn to spot the market better? Is there something you can do to practice and use some backtesting, or is it something you just have to learn with experience?
I do think a certain aspect does come from live experience in the market. That can't be replaced. But you can certainly shorten that learning curve by just time in the market. And time in the market can be backtesting. It can be going through 20 years of historical data and just seeing how the market ebbed and flow, reading and testing whatever you need to test. It could be doing stuff like doing extra chart time per day. So I used to work with a trader who, he wasn't a day trader, but he was in a live room with me every single day. And I'm like, why are you in here? He's like, well, I'm down here on the 5-minute charts. And he's like, what I'm doing is I'm getting so many more reps in the market than I would be on a 4-hour or a daily. On a daily chart, he's like, I may get one signal or one setup, whatever he was working on, one a month. Here in the 5-minute charts, I may get 5 a day. So even though it's not the same time duration, he's able to see and train his eyes to see whatever it was more because he was on a lower frequency market. So doing stuff like that, I do a practice where I review a chart every day. I'll go back and pick a random chart and I'll just scroll through the day or scroll through a couple of days and just train my eyes on seeing stuff. So experience is not really based on age or actual like time as far as seconds and minutes, rather how much time you're investing. So, if you want to cut down that learning curve, right, invest more time on the charts on a daily basis. You'll gain a lot more experience than someone who isn't.
What would you tell someone who thinks that either backtesting or like reviewing charts or trading them or even is like a waste of time or it's boring?
I would challenge them to tell me what's better. What's a better result? We just talked about how backtesting can gain you experience. There is no better. See, I think the problem is that people, first of all, people don't want to do backtesting because it takes work, right? And people in general don't want to invest time to do work. But backtesting will give you more data than you've ever had. It gives you historical data. And there's no better predictor of the future than the past. Now, it doesn't mean that is the future going to play out exactly how the past did? No, right? You can't simulate, predict Trump tweets. You can't predict COVID or whatnot like that. But what backtesting does, it gives you a massive amount of data. And that massive amount of data tells you all types of tendencies about your system or your strategy. It tells you all types of tendencies and stats about the market. It gives you expectancies. It gives you a wealth of information that can't be replaced unless you were spending 10 years of doing live trading and tracking it. So the question I would say is, if you want that same amount of data, would you rather spend 10 weeks doing back testing, or would you rather spend 10 years in the live market to get it? And I think it's a simple solution. But I think people that say that, they're just lazy. I don't think there's any other excuse aside from like, they don't want to do the work. And they're saying it just to convince themselves not to do the work. And they're going to fail. They're going to fail. Yeah.
And it's a lot more efficient for sure to go back to do backtesting in like an hour or two than to spend like days or months in the market, for sure.
It's silly. I try not to get offended by stuff anymore. That's one of the things that's still like it's just stupid. Like it's not even worth arguing with. It's just dumb.
So where can people find you? They want to connect with you or reach out after the interview?
I'm all over social media at Akil Stokes RTM. I would just say you got to be careful of the scammers out there. So I'm sure you've got a few as well. There are people with fake names. I always say this. If I ever DM you, especially if I DM you and ask for money or ask like to manage an account or something like that, it is a fake account. Now I'm very approachable. So if you find me on social media, again, Facebook, YouTube, Twitter, Instagram, feel free to reach out. Don't be shy. I love talking trading. I love answering questions. But if I DM you first and I don't know you, it's probably not me. And if I ask you for money, it's especially not me. But yeah, follow me. A lot of free content out on social media. I believe in helping not just the traders that I personally work with over at Tier 1 Trading, but anyone that is on the journey and just wants to better themselves.
Yeah, you do put out a lot of content on YouTube also and Twitter as well. So definitely a lot that people can follow and learn from really quickly. That's awesome. I really appreciate this. I'll try to put some links below the right links below the video here so you guys can check it out. And thank you, Akil, for your time. I really appreciate it. I hope we can connect soon again and discuss these things more for sure because this is really cool, good content and good stuff. And I'll talk to you pretty soon.